Today we're going to talk about technical analysis, which is a tool that is used to try to predict the price movements of assets. The things that we're going to work with are called technical indicators. There's quite a few that are pretty easy to use in Excel, and I'm hoping I can show you how to use what I think is the easiest one, which is just a simple moving average. What we're first going to do is go to Yahoo Finance. That's just finance.yahoo.com. Now in the quote lookup over on the left, you can type in any stock you want, but I'm going to use Microsoft. Microsoft is fairly well known, so I think that's an easy way to start. Now on the left-hand side, we have a list of all these different things that we can use. Technical analysis takes historical prices and tries to predict the future movements. So I clicked on historical prices, and I can use any date range that I want. I can use daily, weekly, monthly, or the dividends that Microsoft has paid all the way from when it became public in 1986 to now, and that's today's date. So I'm going to leave it as it is, and this is all of the historical data of Microsoft. I'm going to go to the bottom and click Download to Spreadsheet. Now the historical data opens up in Excel, and you can see that there's these hashtags, these pound signs that show up, and that's because your columns are too narrow. So if you click at the top left corner right here, you can resize all of the columns so that they fit. And you can drag as large as you want it. If you double click, it'll automatically resize to how we want. Good. So now we have the historical data of Microsoft. So with technical indicators, we want to take the past prices and try to predict the future prices. We don't need all of this data. We really only need the close and the date. So I'm going to go ahead and delete the stuff that we don't need. And if you click up here, you can highlight, right click, and hit delete. And it will get rid of those. We also don't need the volume or the adjusted close. Now the easiest technical indicator is a simple moving average. So that's what we're going to start with. Simple moving average. And the most common is a 50-day. The second most common would probably be a 200-day simple moving average. And all it is the average price for that time period. So the function would be equals average, and we can highlight 50 days worth of data. Since we start at line number 2, B2, we would go all the way until B51, and that would be 50 periods worth of data. Go ahead and hit enter, and now you see that we have a number here, and that is the average price for those 50 days. I can copy that formula down by double clicking on the bottom, and now I have the simple moving average filled in. The same thing can be done for the 200-day moving average. Formula would be equals average B2 through B201. Same thing we had in the beginning. You can see that we had B2 to B51 for the 50 days, and B2 to B201 for the 200-day. We can copy that formula all the way down, and now we have the simple moving average for 200 days and for 50 days. Now let's see how it works as a technical indicator. I'm going to highlight the date, close, and the 50 and 200-day moving averages, and go all the way down. I'm going to go to 500 days. I think that's probably a good range that we can use. It's not super important to be right on 500. Just a decent amount of time is good. Now I will go insert line, and I'll insert a chart. I'm going to go ahead and move that chart to a new sheet. Move chart, new sheet, and I'll call it simple moving average. And now you can see that we have this chart on a new page. Moving averages are often used to try to predict price movements. When there's a crossover, what's called a simple moving average crossover, it often indicates a drop or a rise in prices. So we have a 50-day, which is the red line, and a 200-day, which is the green line, and then the price, which is the blue line. So you can see there's a crossover right here where the 50-day moving average comes up and the 200-day moving average stays flat. And that tends to indicate an increase in prices. If we see there, we can see that that indicator happens as the price is rising. And we can see over here the opposite is true. When the red line, the 50-day moving average, goes down, then the price is dropping. Moving averages are often used to indicate trend reversals. Sometimes the price will bounce off of a moving average line. A lot of interesting studies have been done using these moving averages. Moving averages are probably the easiest indicators that you can create with Excel. Stockcharts.com is a great website to use for technical indicators. They should give you a long list of all the different technicals that you can use. Under overlays, you'll find moving averages, which is what we just talked about. Simple and exponential moving averages. They give you a history, how to calculate them. There's also something called an exponential moving average, which can also be used. And so we can see here how they were plotted on this chart. So this is a pretty introductory step to technical analysis. Hopefully it was helpful for you. I'm going to do more videos on other types of technical indicators, things that are a little more elaborate, some that are a lot more fun to do. But this is a good place to get started. If you have any questions, please don't hesitate to ask. Email or message me, and I'll try to get back to you as soon as possible. Good luck with your technicals, and have fun.